We've been very consistent. The combination with Express presents an outstanding opportunity to improve affordability. Per your comments a few moments ago, everybody from the president through corporations, through individuals want improved affordability. Cigna and Express both individually are functioning very well, delivering very low medical cost trend or growth, and the combined company will actually further improve affordability. Cigna stepped forth with a goal to deliver medical cost growth or trend at a CPI level by 2021, and we're already delivering the lowest medical costs in the industry. So it's all about creating value for customers and clients, and as a result, delivering value back for our shareholders, and we're committed to this really attractive strategic and financial combination.
Yeah, Mr. Icahn talking on about a number of things that get fairly complex in terms of rebates and policy from CMS. But David, timing is good here because I did want to get you to try and explain, at least to our viewers and your shareholders. You know, last night I guess CMS made some changes to Medicare Part B to emulate the tools and practices used in Medicare Part D. Can you sort of give us a sense here as what the difference between B and D is and whether it's good or bad for Express Scripts?
Sure. So the headline is it's good. And from a macro perspective, the commercial market has been using a variety of mechanisms around formularies, so aggregate pools of pharmaceuticals that have clinical effectiveness, working with manufacturers, coordinating clinical programs, step therapies, et cetera. And essentially what the secretary stepped forward and said is it would be a good thing for the Medicare programs for some of those proven capabilities, for example, that Express Scripts does quite well, to be afforded to the Medicare program with the objective, back to our first point, of improving affordability with tremendous clinical quality. So the secretary's statements yesterday afternoon, we agree with. We view them as an evolution to the marketplace, and the combined company is in really good position to be able to perform and deliver more value, in that case, for Medicare beneficiaries through improved affordability. And again, in a nutshell, it's using proven commercial solutions for government programs to improve affordability and quality.
Icahn suggested you guys could do, instead of buying Express, you could do a multi-year partnership. And that would be better than buying them and taking the risk therein. Why is that not something perhaps that you would have explored or considered? I know you had a multi-year partnership with Catamaran a number of years ago. That was then acquired. Give me some sense there as to why that wouldn't be an appropriate avenue.
Sure, David. So first, we're a company that does believe in partnering. So in a broader sense, we partner quite effectively, for example, with 500 physician groups and hospital systems around the United States to help to coordinate and deliver better value and care. So we get the concept of partnering. More broadly, relative to this combination, it's more broad than a PBM acquisition. There's a set of capabilities. There's a tremendous distribution expansion capability for us. For example, Cigna only overlaps with 10 to 15% of Express Scripts commercial clients. Cigna doesn't compete in the health plan space. Express Scripts does, and it presents an opportunity for us to offer behavioral and well-being solutions, et cetera. And importantly, what's being proven right now is the integration of data to work more effectively with the practicing physician for the benefit of their patients, our customers, presents just an outstanding opportunity to improve affordability, quality, and service. So we see it as a strategic reformatting and repositioning opportunity. Beyond that, Mr. Icahn suggests that what Cigna should do is sit on the sidelines, allow the marketplace to shake itself out, and buy back our stock. We don't believe that that is a strategy. We believe that that is more financial engineering, and we're attuned to being able to deliver outstanding shareholder value. I would just highlight the fact that we've delivered in excess of 380% TSR over the last 8+ years. So we're used to delivering outstanding shareholder value, but we do so by working in the marketplace to create value for our customers and clients.
All right, Mr. Cordani, Jim Cramer, you know I'm a huge supporter of Cigna. It's been a remarkable stock, and you've been a great supporter for Philadelphia, which still matters to me. But I do want to ask you something. If you stayed independent, when I look at CVS's numbers today and how great their pharmacy benefit manager does, you've got a fantastic pharmacy benefit manager. I am not saying that the combination could be interesting long term. I think it is. But your stock, I think I could argue, would be at 200 to 210 today, just based on what CVS is saying, what United Health is saying. How do you deal with the fact that that would be fabulous performance and everybody would want that?
So Jim, again, good morning and thanks for your comments. we've delivered great results. Our 2017 results were off the charts, top line, bottom line. We delivered the best medical cost trend again in the industry, and 2018 will be the 6th consecutive year. So we have a strong foundation, and we're delivering for our clients and customers as we grow our business, and we're proud of that. Secondly, we view our stock as temporarily dislocated and is a phenomenal value today, and we're confident we're going to grow that value over time. The difference is this combination presents an opportunity for immediate value creation, mid-teens accretion in the first year. We don't have to wait 3 or 4 years. Mid-teens accretion in the first year, excluding the known transitioning clients, exceptional free cash flow, $6+ billion in 2021, but cash flow in the first 18 to 24 months to deleverage the franchise and still have significant capital to deploy even in those 18 to 24 months for additional shareholder value creation. So we agree with you. Our company is high value. Our company has been performing quite well, and we're confident in our ability to create tremendous shareholder value, but having these capabilities to further improve affordability, to take our country to a sustainable level of a CPI or better level medical cost trend with deep partnerships with physicians and broadening our reach to address the marketplace and drive growth, that's attractive to us, all while delivering that outstanding shareholder value. And we don't have to wait 3 to 5 years for it. We'll deliver that accretion in year 1.
David, have you talked to Icahn? Did he get in touch with you some way? Did you have a dialogue?
We're disappointed that he chose that his means of communication was an open letter. There's been no inbound to our corporation.
ISS coming up with a decision. It can typically, in situations like this, be certainly of importance, given its influence on some large shareholders. Can you characterize how your conversations with ISS have gone and the arguments you've made there and what your expectations are when they come out with their recommendation, I think on Friday most likely?
Yes, strong governance is an important part of what ISS would look at. We've had very good engagement with ISS to walk through the strategic rationale, the governance framework from our board of directors that was applied over the top of it, the valuation framework, and then the value creation framework, including the mitigants to deal with the changing marketplace, including changing regulations around the overall market. We're confident in terms of the shareholder value creation. We're confident that ISS understands the shareholder value we've created over the last 8+ years, and we have a good open line of communication with them to ensure they have all the information they need to draw their conclusions.